All right, so walk through $10 depreciation on the financial statements. And really, this is how the question typically goes, right? So, year zero, buy piece of equipment for $100, okay? Assume 10-year useful life, you know. Okay. So let's walk through year zero impact, okay? So we'll just call it year zero. We'll just say 2026. What happens in 2026? We buy it 7/17, the date today, 2026. Okay. So what do? We just assume it's cash as well, right? So it's PP&E debit, right? That's incoming, right? Because it's an asset account. Cash 100. That's going out. Okay. This is balance sheet, right? This is your balance sheet impact. Okay. Okay. Bam. Okay. What happens to the income statement? Well, nothing actually. Nothing. Okay. I'll just keep this for, right? What about cash flow statement? Well, CFI, cash flow from investing, negative 100, right? Which means total change in cash is also this, right? Which would make sense, right? These are tied to each other. If you credit cash, it means it goes down. So that's what happens, and that's in year zero. What about the year one impact, right? What? So sorry, end of year zero is what we'll call it. What's the journal entry? Like, it's a journal entry. Really, what's the financial statement impact is all I'm really asking, right? So balance sheet, what happens? So PP&E, really it's depreciation expense, right? Right? So it's 100 it's $10, right? Because it's 100 over 10-year useful life. That's given. AD, accumulated depreciation, right? That's 10. It's 10. So which means PP&E net now 90, not 100 anymore. Okay? That's kind of how you would take. Let me align this so you can see it. That's kind of how you would look at that, right? From an income statement perspective, well, you guys have definitely seen. We talk about depreciation all the time on these, on various things. So yeah, so it's So let's actually look. Let's pull it out here. So revenue 0, right? Gross profit no impact, right? But OpEx, right? D&A. That's now down by negative 10, which means EBIT is down negative 10. However, tax rate, let's assume 25%, which means net income is actually down net income is actually down 7.5. Okay. That's what's happening because it's the after tax impact. Okay. Now let's look at the cash flow statement. Okay. What's happening on the cash flow statement here for this depreciation impact, right? What's happening? So take a look, right? CFO, right? Cash flow from operating activity. So this is the beautiful part about this is why we do all these add backs, right? For unlevered free cash flow and all that kind of stuff. So So what's happening here, right? You've got CFO, cash flow from operating activities. So there's actually a couple things you want to look at here. So DNA, right? Added back. So here we're actually going to add the full DNA. Okay, that's the thing. But here's the thing. So you have CFO, right? You have net income. This is the other thing is, look. It's annoying. Give me one second. Net income is now down 7.5, right? But now your DNA, right, from a CFO perspective, is adding back 10. Okay, so that means your CFO, I guess I'll bring this down here. CFO is the sum of these two. So your cash flow from operating is actually up by 2.5. No impact to CFI at this time because, again, the CFI impact comes if you buy equipment, but here we're just doing the depreciation. So what's your total change in cash? It's this. Your cash is actually up 2.5. So let's look at the assets equals liabilities plus equity, right? Let's look at it. So on the asset side, where are we at now? PP&E, right, was 100. Accumulated depreciation we did up there, negative 10. PPE net, right? That's your PPE net, okay? Cash. Let's look at cash. What did we just say, right? Cash is 2.5, right? Cash is up by 2.5, correct? But remember too, right? Your cash was down by 100 when you had it. So you've got this 97.5, right? So equals, right? This minus 100, or sorry, equals negative 100 plus 2.5, right? This is kind of where we're at. So total assets, negative 7.5, right? It's what it's down. Again, there's if you have you would have a surplus of cash, so you just add that all in, but I'm just showing you the impact. Liabilities, nothing, right? No impact. Equity, what did I say earlier, right? Retained earnings. Well, what would that be? That'd be this net income right here, right? Which we calculated here step by step. So this is this, and these always have to balance, right? So if this is 0, does this equal if this equals this plus this? Otherwise, we'll say no. Does it balance? The answer is yes. Okay. Now, the final piece of this question, which could happen, they could say like in year 2, you could run that for a couple of years, but you could basically say sell in year 2, okay? Or sell next year for, $100. We'll sell next year for $100 the equipment. So now, and I'll do this in the next year, but this is how you walk through depreciation on 3 financial statements, how you walk through a CapEx, situation. And so it definitely takes time to do it. Interviewers will be okay with you writing down your answers. You'll mess it up. I'm a CPA and I even messed this up for a super day and eventually got it. But you want to run through this scenario multiple times, okay? This is a common one to get. Bankers love to see people do math on pressure. They'll do enterprise value, equity value, accounting questions like this. Not insane accounting questions, but this is, something I would definitely be ready to do. I guess I'll just do it real quickly here from a from a so you sell it for year one, right? Which means now you've had year zero and year one, which means total DNA is 20. PP&E start with 100, which means net PP&E total DNA, i.e. your AD, right? Accumulated depreciation. It's this minus this, right? 80. So basically, you're selling this for a gain, right? Gain. Okay. So now, so your balance sheet impact, we can kind of look at that at the end, but your income statement, I'd bring this back. Just take this template real quick, right? Revenue, nothing, right? GP, OPEX, really nothing. Well, no, I guess it's a gain. So you take the 20, I just put it in under operating, which means EBIT's going to go up, which means now your net income's up 15, right? With the 25% tax rate. So just taking this model here, right? This cash flow statement, let's take a look at it again, right? It's up 15, okay? But gains are always subtracted, okay? Same way losses are added back because it's not really a cash outlay. You just, it's been incorporated, so it's something you just want to take out when you're looking at cash flows. So we take negative 20, get rid of it. That's your cash flow from operating activities. Total change in cash is actually negative 5. Okay. So now you're looking at that, you're saying, okay, or wait. So hold on. No. No, you are incorporated, but here's what happens. So your CFI, right? You sold the equipment for $100. So it was $100 inflow. Okay. So actually, what it is you take this. So $95 is the total change in cash here. Okay. That's basically what you want to take, what you want to do there, right? Presuming you got rid of it for 100, but it was worth 80. Okay. It's no different if you go up here. Look what happened, right? Your CFI went down 100. Well, now you're selling it again for 100, but the book value has changed. I think the other thing too is in this year you would actually add back the DNA too. By the way, so you know let's add back the DNA too. I would actually make sure you do this, right? So here's your total CFI impact. It's actually 105. So now let's take a look at the final balance sheet, right? Let's take a look at everything. Let's see what's happening here. Here, I'll just make this balance sheet. Okay, you got this. So what's going on here, right? So now this is what it was, correct? But now we're gonna add in 100 of cash. We just got that. Okay, your PP&E, you're effectively getting rid of this, right? We're getting rid of it. You're wiping the AD too, right? So we'll just get rid of it. Okay. PP&E is gone. Cash is right here. Or sorry, you would do 105, right? You would take this piece. Okay. So that's where we're at there. From a net income perspective, right? You would take this. Okay. You've gotten rid of that. That's your net income impact. The other thing too is don't forget. So that's 20, right? You actually need to take this and you need to subtract the 10 of the depreciation that's coming through, right? 7.5, 7.5, 97.5. Right? Because it's 20. The gain is $20. You sold the PP&E for 100. You're getting a 20. It's worth 80 right now. You get a $20 gain. $20 gain minus the $10 of DNA. Your EBIT is therefore up 20. There's your net income. You add back the DNA. You subtract the gain. Your total CFO impact is right there. CFI, you're getting rid of it, right? It's a plus, it's an addition. So 97.5 is going to be the change in cash at that point. So before you had negative 97.5. So now you've got 97.5. It's a wash, actually. PP&E goes away, right? You're getting rid of that. Accumulated depreciation kind of goes away. PP&E net. So then this is your kind of total assets right here from the deal. And then this is kind of your retained earnings. And I guess the situation there would be retained earnings is cumulative. So I guess you would add it in with the last period. And it's a zero. So it's actually technically a wash. So that's how you would kind of make those two connect. So I apologize for just walking through all that. But to me, that makes complete sense. So that's basically it. And I know I picked numbers that were eerily worked out together, but this is how you have to think about it, right? This is kind of an accounting format. It's watered down, right? But this is how you're going to have to kind of walk through these scenarios. Okay. Really know this well. I've had to walk through this in an actual interview before, and it was not fun. Again, I'm a CPA. I still struggled through this. I did mainly because I didn't practice it that much, but I eventually still got the answer right. Fortunately, knock on wood. But this one will make you sweat. But it's not just walk through. $10 depreciation, assume 40% tax rate. $6 go through. It's a step by step process. So I'm going to save this down as the Scratch template, and y'all can kind of leverage this going forward. I would encourage you, but I know it's not the most prettiest thing. But right now, it's not about having the prettiest template. It's about having the logic down cold in a way that's not too complicated. That'd be my recommendation.